a lot of interesting things. So I think we can hit a lot of small stuff. But the first thing I saw was this the information, which is I believe a Silicon Valley research or not research reporting. They're like really I don't really know exactly what their deal is, but they do great reporting in the Valley. And they found so a chart that outlines the gain in Google's or Alphabet slash Google's headcount since 2019 because they've uh they're not that the company's not that they give out as limited information as they need to when talking to investors, so they're a bit of a mystery sometimes. And they found this, say, internal document that showed where all these employees are coming from. And I think it was a bit surprising. So the number one was cloud at 50,000 new employees. Second, sales and partnerships, 30,000. Like maybe that's where we go for the cuts, if I'm gonna be fair. 10,000 were in hardware, so Pixel, Nest, Fitbit. That seems pretty legitimate. 10,000 in Android and Chrome, pretty legitimate. Ads product around 12,000. Search and assistant 10,000, and about 7,000 in YouTube. I don't know. Well, you're not in the document right now, but you can go look at that in the Power Hour document. I have it posted if you want to look at it, Ryan. But any surprises from what you saw there? I think for me, the biggest surprise is one, how little search. And they probably already had the most employees before 2019, but how little search gained employees while still growing revenue. So I think that was a very positive sign for me for the operating leverage of that segment. And second, just the sheer number in the cloud division, which, to be fair, has been putting up very strong growth numbers at a huge scale. But just that number, the 50,000 number, uh, definitely stood out to me.
Yeah, it makes the growth feel a little less impressive, I guess. Not that, I mean, it's still it's an improving business, and I think it's at on pace at what, $25 billion in recurring revenue,
I think higher, but I
slightly
can't.
higher.
I think
The
30. I think 30, but don't have the numbers in front of me.
yeah, I mean, it's cool that they built a $25 billion recurring revenue business and getting to the point where it's operating income nearly it's getting to the point where it'd be operating income positive, but when you got to hire 50,000 employees to do it, it just makes it feel less like an achievement, like a,
Yeah, it's like a brute force kind of.
but if that's what you have to do, I guess. I mean, it is cloud's a wonderful business, and it's not like those employees have to stick around. Um,
Or they can scale up as maybe
that's how it,
thinking
okay. You know what? That's
thinking
how it's always
thinking yeah,
sounds.
I know, thinking optimistically, they can scale up and they're planning for the future and building out all these products. But pessimistically, they love to continue to hire. So
My pet theory here, and what I thought was how businesses worked and got to profitability, was they invested for growth, and those costs or those investments became a fraction of the revenue that they generate over the lifetime value of their users. But what I'm finding out is that all these businesses invest for growth, fire all the employees, and then have their customers, and there are the profits.
well, or they just hire employees because they can.
Yeah, maybe. The what was the second one there? Sales and partnerships.
Yeah, I'm not sure exactly what the definition was there.
I don't know what that is.
Yeah,
Sales.
may
I mean, if it's, I would think like the biggest sales.
the Apple partnership. I don't know how many people need to work there because I would assume that's just a legal team. Um, I don't know.
Where's their sales staff? Like, who are they selling to? It's what product do they have to sell that doesn't sell itself? Search sells
Well,
itself.
cloud is, but that's within cloud.
That's
has
what I mean.
outbound sales. Yeah, I do not know the definition of sales and partnerships. But what about the other ones? What about the other ones there?
Well, I find it impressive that YouTube's so small. Although it might just be the fact that they have a lot of employees to begin with.
Yeah, yeah, but it seems like they're doing well without needing too many, and that's kind of the theory that a lot of people had. I like that Android and Chrome kind of get a lot of work because that's really important for the moat. And I honestly like that they're investing in hardware. Nest and the smart home stuff I could really forget about, but I think the Pixel is could be a nice growth driver for them. So, um, yeah, I like that.
Yeah, maybe, but I have my gripes about the Nest. I don't think that's going to be too successful.
Yeah, yeah, smart homes were a bit of bit overblown. I think we can conclude now.
I'm glad I'm not seeing whatchamacallit on here, their gaming platform.
Stadia,
Yeah,
whatever it was called.
yeah. Glad I don't see that on there.
Yes. Yes. Not, and at least they included search and Google Assistant in the same one. So, unlike Amazon, who spent probably the same amount, added the same amount of employees just for Alexa,
Yeah.
that Alphabet did for search and assistant. You can see why they have the margins that one person doesn't. Amazon, or excuse me, Alphabet has one set of operating margins and Amazon has another. Yeah. Anything else on that?
No, not really. Any other headlines? You're gonna have to carry the weight here this time around because I don't have my computer up in front of me, but
Yeah, we had the technical difficulties made it tough for research this week, but I think there's a lot of stuff here. Okay. There was a tweet from Mads Capital. There's a lot of information here, but I think it'll be fun to talk about. So here's the tweet: public cloud update from JP Morgan. I love when people share screenshots from the proprietary um, stuff that they send that the banks send to clients. It's very great. AWS record backlog of $104 billion. AWS, Azure, and GCP. GCP is Google Cloud, Azure is Microsoft, equal approximately 75% of the global market. Current inflationary macro environment has driven customers to optimize cost, slow spending, and trade down instances and storage. That just means trade down how much they're kind of spending. They're a little bit more conservative on how much they're spending in the cloud. So what he means, if we look at, I guess there's some more information in some of the slides he laid, because that's just information from the tweet. Anything surprising there, or is that kind of what you assumed things would look like?
75% numbers generally what I thought it was, or at least that's like what I kind of heard last. That AWS backlog is astounding,
It's
and
nice. They got
and
the
it's
long
growing.
term. Yeah. And we just did that show on Autodesk, which again, no one's ever going to hear. We're going to have to re-record it, I think. But thinking through that episode, I was like, man, they're going to be spending a lot of money on AWS.
Yeah, uh, I guess everyone is. I'm looking at the stats right now. 7-year head start, and in 2022 is 1.5 times the size of Azure. Guess that's a testament to Azure. 3 times the size of GCP, but the gap is tightening.
Yep, and they outlined here revenue growth percent at AWS 30%, Azure 37%, GCP 37%. Yeah, it's pretty. I th- yeah, I really don't see how all three don't win, but I kind of like AWS and Google Cloud more just because Microsoft seems to be more tailored to the old economy companies, and AWS has really a lot of presence in the startup ecosystem, and GCP seems to have a lot of presence in AI, machine learning, stuff like that. But again, that's a bird's eye view from a non-expert, and I think all three will likely do well.